One of the best ways to find good investment ideas is to cheat a little bit by copying some of the world's best investors. In this video, we're going to talk about what 12 of the best investors of our generation are currently buying and selling in their portfolios.
This video is for educational purposes only. It should not be considered investment, legal, or tax advice. It is not an offer to buy or sell any security. Past performance does not indicate future results. Investing is risky.
The first investor we're going to look at is Bill Gates. Bill Gates requires no introduction. Obviously, he is the founder of Microsoft, but Gates is also a fantastic investor. He manages the Bill and Melinda Gates Foundation. They bought Berkshire Hathaway, which seems to be a common theme if you look back at their last couple of quarters. But interestingly, they also bought Bud. Bud's been in the headlines a lot. At least Bill Gates believes that Bud is now a good deal. The next investor on the list is Seth Klarman. Seth Klarman is not a very well-known value investor, but he is a very successful one. He actually wrote a book called Margin of Safety. It's no longer in publish. It's not on Kindle, and they regularly sell for over $100 on eBay. Klarman started the Baupost Group in 1983, and he now manages over $9 billion. And the track record has been truly sensational. So the most recent data I could find, unfortunately, was only going back to 2008, but from 1983 to 2008, Klarman beat the S&P 500 by a remarkable 14.5% per year, and that is net of all expenses. So an absolutely mind-blowing performance against the market. So what is Klarman doing in his portfolio? Well, he's taking some profits in a couple of tech names. He's selling out a little bit, reducing his stake in Google, which is interesting. Also Qorvo, which I own in one of my coffee can portfolios. He is taking about half of his position. He's adding a relatively large position in Garrett Motion, GTX, 3.1% of the portfolio. He's also initiating a stake in Amazon, which is kind of interesting. And also just goes to show that value investing and growth investing are not distinct. We've talked about that before on the channel. But Amazon, obviously a growth stock. In Klarman's case, he's a value investor, so he sees value in Amazon, and Amazon's future growth discounted back to today is obviously part of that value calculation. He's also buying Fidelity National and added new stakes in Dollar General and Union Pacific, while adding two positions in Seagate, SS&C, and Jazz Pharmaceuticals. He did sell out of 4 different stocks entirely: Skyworks Solutions, which is a microchip company, Fiserv, Lithia Motors, and Digital Bridge Group. And now a quick word from today's sponsor, me. Ronald James Reed was an American philanthropist, investor, janitor, and gas station attendant. Despite earning a janitor and gas station attendant salary, Ronald Reed amassed nearly $8 million over his lifetime. How did someone with such a modest amount of income amass such great wealth? Ronald Reed and other famous investors like Warren Buffett and Robert Kiyosaki have laid a clear formula for all of us to be able to reach financial freedom. The Financial Freedom Formula is a 4-hour, 47-video, 6-module e-course designed specifically to help beginning and intermediate investors learn how to generate passive income from your investments in order to reach financial freedom. If you're interested in more about the course, click on the link right below this video. The next investor on the list is Monish Pabrai. He and Guy Spear actually won a lunch with Warren Buffett. I forget the amount they paid, $2 million to have lunch with Warren Buffett, but he is a value investor and he does a lot of investments overseas. His fund has a tremendous track record of outperforming the market, which is a theme of all the investors on this list, which is why we care about what they're buying and selling. Pabrai is really interesting. He does a lot lot of buying and selling in stocks that most people just have never heard of before. But you'll see that he makes massive bets. He's very much a believer in concentrated portfolios of only your very best ideas, and he is not afraid to take big positions. But AMR, Alpha Metallurgical, I can't even pronounce that, Resources, bought some of that, and he bought some Consol Energy. He sold out of Micron, which is a semiconductor. You're noticing a theme here. A lot of these big value investors have been reducing their stakes in semiconductors and chips, also selling completely out of Brookfield and Seritage Growth Properties, which is a real estate deal that he's been involved in for several years now. Next, we're going to look at Li Lu. Li Lu has been commonly referred to as the Chinese Warren Buffett, and for very good reason. Since he founded Himalaya Capital in 1998, that fund has generated annual returns of 30% per year versus just 8% per year for the S&P 500. Lou had only 2 changes this quarter. Same stock we saw with Monish Pabrai, Micron Technology. He sold out of his entire stake in that stock, and he's adding a position in East West Bank Corp. So this is a good sign if you're someone who's looking to maybe do some value hunting in the financial space. Next on our list is David Tepper. But this is a kind of a back test of his top 20 equal weighted holdings going back to 2001. And those top 20 holdings have absolutely crushed the market over that time period. You can see this is Tepper, at least his top 20 holdings equal weighted. So it looks like about 2,700% for Tepper's fund, whereas the S&P 500 looks like it's about 500% over this same time period. Tepper's also one of the most active investors on this list, and you'll very clearly see a theme in what Tepper is buying, and it's all to do with tech. So while we've seen several other investors trimming their positions, particularly in Micron Technology, look here, Micron Technology is on Tepper's list, but instead of selling it, he is buying it. So while it seems that most investors, at least these super investors, are shying away from chips as their big run-up has apparently made them overvalued in their mind, Tepper is doing the opposite. He's adding, he's got NVIDIA, which he already owned, but he's adding quite a bit to that. He's adding to his Alibaba stake, adding to Microsoft, and he initiated new positions in chip manufacturers AMD, Intel, Qualcomm, TSM. He's also buying Broadcom, which is another chip company, Lam Research, another chip. And I'm not going to go through all these. Well, Cadence Design, that's another chip company. He also appears to be bullish on Chinese retail with Baidu and Baba. Added to Amazon, which we also saw earlier, with Seth Klarman initiating a position in Amazon. He did sell his entire stake in Salesforce, which is interesting, and also sold his whole stake in Tesla. So he's very clearly bullish in some areas of growth, but not so bullish in others. He also sold all of his Disney stake, all of his ARK Innovation ETF, which is interesting to see that he owned that in the first place, but not terribly bullish on Cathie Wood. But you see a couple other Chinese retail names, JD.com, Pinduoduo. But he's not as bullish on energy. He sold his Alerian MLP ETF and also sold out of Cisco, which is a food supplier. But the theme here clearly from Tepper is semiconductors and technology. Next on the list, we have David Einhorn. Einhorn is interesting. He actually had a very big year last year in 2022. So while the overall S&P 500 was down 18.1%, Greenlight Capital was actually up 36.6%. So here was his list of moves in Q2 23. So Einhorn doing, again, a lot of buying and selling in names that I've never heard of. These look like a bunch of smaller companies. So I'll let you pause the video if you're interested in taking a look. But one interesting thing to note, and we'll see this Activision Blizzard later on, there's another major super investor that is selling Activision, while Einhorn is buying it. So this has been in talks with Microsoft to acquire it. There's questions on whether the deal is going to go through or not. So this looks like a bit of a merger arbitrage play from Einhorn, thinking that Activision is more likely to get purchased by Microsoft, the regulators allowing that to go through. Next investor on the list is Chuck Akre. Akre's a manager that I've really admired because his philosophy fits very closely with my own. This is a quote from his website. The Akre Focus Fund invests in a small number, so concentrated portfolio, of what we believe to be extraordinary businesses that are run by talented and honest managers who wisely reinvest free cash flow. And the Akre Focus Fund, which you can actually invest in yourself, has outperformed the S&P 500 net of fees by about 1.2% per year since inception, 14.83 for the Focus Fund, 13.61% for the S&P 500, and that is an inception date of 8/31/09. They trimmed their positions very slightly in Moody's, Adobe, O'Reilly Automotive, and American Tower. AMT is interesting. This has been a really very much a dog in 2023. So it's interesting to see Akre trimming that even further, not finding value there, instead seeing some kind of fundamental concerns clearly. Next is Chris Hohn, but he's really interesting for a couple of reasons. The first of which is that his performance has been really good. His fund has returned 18% per year versus 9% per year for the S&P 500. The main reason why Chris is on this list is because, well, he's a good investor. But the other thing I like about him is that he actually committed to donating 50 basis points of everything that this fund generates in fees goes to charity. And he specifically focused on children in need. It's the Children's Investment Fund, TCI. And this fund was started in 2003. So I like the returns and I like his charitable aspirations. So let's see what Chris was up to this quarter. This is very interesting. I've not seen too much action on General Electric. A lot of people pretty bearish on it since it basically blew up from what appears to be poor management. He added to his position pretty significantly, 5% of his portfolio to General Electric. He also added a decent chunk to Thermo Fisher Scientific, which has not been doing as well, particularly against some other healthcare names in that same space like Stryker. He also added to his position in Canadian National Railway, Ferguson, which is a plumbing supply company, and Moody's. He trimmed his position in Visa just very slightly and also took a little bit away from Microsoft and Google. Next, we have the relatively controversial investor Bill Ackman. Pershing Square, since 2004, has generated 15.9% per year versus 8.9% for the S&P 500. So here are Ackman's moves for the quarter. The most interesting one, to me at least, is he is trimming his position in Lowe's, which is something that I've talked about in the series, the Dividend Investing Final Four, reduced his position by 25%. Most of these other ones were relatively small moves, trimming Chipotle, another rail, and a couple companies I've not heard of before, well, Hilton. He's also adding a bit to Google. So a couple investors adding to Google, a couple taking profits, so definitely mixed opinions on that stock. Next, we have one of my favorite investors of all time, Howard Marks. I've read a couple of his books, saw him speak at a CFA event in Indianapolis a couple of years ago. Just a very impressive guy. His Oak Tree Capital Management has generated 18.8% versus the S&P at 10.4% over that time period. So like all the other investors on the list, very impressive returns against the market. But what's interesting about him is he buys a lot of things, as you can see here, that most people have never heard of. But there's a couple big purchases in this Garrett Motion Inc. So that of these companies, probably the most interesting. Ally Bank reducing a little bit of his position there. And then we also see a little bit of bullishness on JD.com. Saw the same thing with David Tepper. He also sold completely out of Toll Brothers, so this is obviously a home builder, which goes against the very thing we saw with our next investor, and that was Warren Buffett. Now, Buffett needs no introduction. Obviously, he and Charlie Munger manage Berkshire Hathaway, and unlike what we just saw in with the last investor, Howard Marks, Buffett kind of made headlines. He bought 3 different home builders. He bought D.R. Horton, NVR, and Lennar. Now, I really like NVR, like that stock a lot. They're relatively small positions, 0.2%, 0.02%, and this is actually basically a rounding error, amounts to basically nothing of the portfolio, but definitely interesting to see bullishness there. He also is reducing his position in Activision Blizzard. He's also completely getting out of McKesson and also completely getting out of Marsh & McLennan, which is kind of interesting. This is one of my favorite stocks. It's an insurance broker, really elite business. So I'm kind of surprised to see Buffett selling out of something like that. But he did take some other, small moves, trimmed a little bit of Chevron, but added a little bit to Occidental Petroleum, and also trimmed his position in General Motors by about 50%. Also cut his Globe Life, which is an insurance company, in half. But an interesting bullish bet here, a little bit on the financial space, which we saw earlier, buying Capital One or adding to his Capital One position by 25%. And the last investor on our list is Terry Smith. Now, this is probably, of all these investors, the investor that my philosophy is most similar to. So his philosophy is basically buy great businesses. That's rule number one. Rule number two is don't pay too much. So he is a bit of a value investor, but not nearly as much as buying great businesses. That's his central point. And the third thing is do nothing. So he is a bit of a coffee can investor. His portfolio generally has very, very, very low annual turnover. Like anything over 10 would be a lot for him. So all of these things I also very much believe in. From inception, his fund is up 532% compared with the global benchmark at 201%. There were a couple changes from him. He sold out of his position in Amazon 100%. He also added quite a bit to his position in Procter & Gamble, reducing competitor Church & Dwight. And this company, Exponent, is kind of on my watch list. It's a $4 billion company that basically they do consulting. So they have scientific consultants, business consultants, engineering consultants, basically, I think, partnering with businesses to solve almost any problem they have from a multifaceted approach. It's a very interesting, very high margin business with very impressive and increasing returns on invested capital. So this is something that I'm looking into. But he slightly trimmed his position in Philip Morris and is adding to his position in Graco. So that is what 12 super investors are doing with their portfolios, or at least have done with their portfolios in the last quarter. Let me know in the comment section which of these things you find most interesting. Thanks for watching, and I will see you in the next video.